First and foremost, how would you summarize your earnings? And then we'll take it from there.
So the quarter four was impacted by a higher cost and subdued prices, primarily because of cheaper imports which came into the country. We had a weaker quarter in terms of demand as well, just pre-elections. That impacted the margins overall. However, I think the volumes were quite good. The volumes were, on a sales point of view, one of the highest. For the year as a whole, we did quite well. We increased our production by 9%, our sales by 11%, and our EBITDA went up by 52%. So for a year as a whole, on a strong domestic demand in India, we did quite well.
Okay, but what about weakness coming in? Higher raw material costs, softer steel prices, on weak China demand. How are you looking at that scenario changing in the coming quarters?
So the last year, the country, in terms of demand growth, grew by 13.6%, which was an incremental 16 million tons of steel demand. This year, even if you expect a growth of 8 to 10%, we would incrementally see 12 to 13 million tons of steel demand coming up this year. From a demand perspective, therefore, I don't see an issue. Capacities coming up in India over the next 2 years will just be able to balance out the demand which is going to be generated in the next 2 years. From a cost perspective, the coking coal cost, which had gone up quite a bit, is coming down in Q1 and progressively likely in Q2. So the cost will go down. The sales prices internationally have improved by about $20. Part of that has been reflected in India. So we see lower cost, stable prices, better operational efficiencies, and a higher volume from JSW Steel on the back of our commissioning of our 5 million ton integrated facilities at Vijayanagar. The hot strip mill is commissioned, and the integrated facility will come up on stream in the next 2 months.
Jayant, can I just ask you, are you foreseeing any, because I know that your suggestion is that steel prices are probably going to remain range-bound moving forward, but with, I suppose the US tariffs that they're imposing on China's steel, and I suppose perhaps the risk of less demand in China for steel demand as well, is there a risk that steel prices could come off considerably, considering, notwithstanding the strong demand you are seeing in India?
So from a demand perspective, China has been weak. Although in the last 1 to 2 months, we have seen better activity. However, having said that, the steel exports from China into the world at large has increased, and that's a cause of concern. So into India as well, the imports have gone up substantially. The good thing is that China's quarter one GDP growth was quite good. They have taken some steps to revive the economy and push certain sectors. We believe that would improve the demand in the country. However, we'll have to monitor how this exports from China grows or impacts the world. That's something which is a risk, which is a concern for the world at large.